Hi, my name's Tom Elliott, Director of Beulah Capital. With me is Beulah's Chief Investment Officer, Dr. Peter Mavromatis, and it's time for our financial market update for May 2015. Well, let's start with reporting season, Peter. Probably fair to say that it was a mixed bag at best. The mining companies had a terrible run. The iron ore prices near record lows. Oil prices have been very low in the past few months. How did you see it?
Well, Tom, I actually saw it as more of the same. We saw very sluggish earnings growth, very slow top line growth, and most of the earnings growth coming through basically cost cutting, cost out strategies from companies that have been extending that over the last 6 to 18 months.
Now, one of the things about cost cutting, of course, is that there's only so many costs that you can cut, so it's not the path to continued growth in profitability. Are you worried at all that Australian corporate profits might sort of start to level out, flatline if you like, in the next 6 months or so?
In fact, we're starting to see that already, Tom, so much so that dividend payout ratios have been rising to the top end of where they've been historically, and we don't think that can continue for too much longer.
Okay, now let's look at some of our portfolios. Now, our growth portfolio has been doing quite well at the moment. To what do you attribute that?
Well, Tom, we've had some pretty good stock selections in the growth portfolio, such as Toll Holdings, which was taken over, or which is in the process of being taken over by Japan Post, as well as running stronger with companies with international earnings, such as Amcor, CSL, of course QBE, which has rebounded strongly over the last 6 months, and indeed Brambles.
Okay, but what about our fixed interest portfolio? We haven't been doing so well there. What's happening?
Well, Tom, we've deliberately positioned the portfolio defensively in order to preserve capital. Interest rates can't stay too low forever, and in the US we're expecting them to rise in the second half of this year, and when that happens there's going to be a lot of pain being felt in the bond market. Yes,
indeed. Okay, now another portfolio we run at Beulah is, of course, our takeover target strategy. It's had a stellar run of late. We're seeing very good profile, if you like, for takeovers at the moment. You've got low cost of debt, you've got a reasonably steady share market. Two of the standout performers for us have been Telco, iiNet. It's the subject of a two-way bidding battle right now between TPG and M2 Telecommunications, and we look forward to further action there. Another one that's worked very well for us is Transurban. Now, Transurban hasn't got a bid on the table at the moment, but lower interest rates combined with its very defensive characteristics mean that Transurban has worked very well for us. All right, thank you for your company. I'm Tom Elliott. This is Peter Mavromatis of Beulah Capital, and we'll talk to you again next month.